This is Mac OS Ken.
Analysts react to Apple's record March quarter, untangling the net cash neutral thing, and sussing Mac availability. It is Monday, May the 4th be with you, 2026. I'm Ken Ray, and this is news from Mac OS Ken, brought to you by yours truly and sponsored by OneSkin, a new standard for your skin. Try it now with 15% off using code MacOSKen at oneskin.co/MacOSKen. This show is also sponsored by NordLayer, toggle-ready network security built for today's business. NordLayer combines VPN, access control, and threat protection in one easy-to-use platform. That is new security for your existing hardware. It's a layer of security added to what you've already got, whether that's Windows, Mac, Linux, or a mix. And yes, it protects mobile devices as well. From small shops to bigger teams, you can add users, features, or servers in just a few clicks, starting as low as $8 per user per month, with special rates for teams with 100 seats or more. Quick deployment, step-by-step onboarding, 24/7 support. NordLayer stands ready to guard your business, and with an exclusive offer right now. Get up to 22% off NordLayer yearly plans plus 10% on top with offer code MacOSKen-10-NordLayer at nordlayer.com/MacOSKen. Try it risk-free with their 14-day money-back guarantee. NordLayer, toggle-ready network security built for your business. Get savings on top of savings with offer code MacOSKen-10-NordLayer at nordlayer.com/MacOSKen. Lots of moving Apple targets last week. A number of analysts have adjusted their expectations or aspirations after Apple's second quarter fiscal year 26 earnings report. That's the one that had Apple reporting record March quarter earnings on record March quarter iPhone revenue and record revenue for services for any quarter. Oh, and saying people are going to see similar for the June quarter, in which you are currently soaking. Apple 3.0 collected a lot of analyst reaction to Apple's report, and there was a lot of it. Tracking mostly the moving targets, B of A analyst Wamsi Mohan likes the strong iPhone demand, the continued strength for gross margins, the anticipated arrival of the AI-enabled smarter Siri, the anticipated arrival of a foldable iPhone, Apple's 2.5 billion plus installed base, the old CEO going to be executive chairman of the board, and the new CEO focusing on product. Mr. Mohan used last week's note to reiterate his buy rating on Apple's shares. He also nudged his 12-month price target up from $325 to $330. Goldman Sachs analyst Michael Ng likes the strong iPhone, Mac, and services momentum demonstrated in the earnings, along with Apple's ability to effectively manage cost inflation. Then there's the better-than-expected third quarter revenue guidance, even accounting for supply constraints. Mr. Ng has a buy rating on Apple's shares. He used his note to raise his target from $330 to $340. Morgan Stanley analyst Eric Woodring did dig Apple's remarkable third quarter margin outlook. That makes the firm more confident in Apple's ability to mitigate record cost inflation. Plus WWDC, the foldable iPhone, all that stuff that's got incoming Apple CEO John Ternus so giddy. Morgan Stanley has an overweight rating on Apple shares. Woodring used his note to raise his Apple target from $315 to $330. Tracking other moving targets with no notes attached, at least none noted by Apple 3.0. Wells Fargo analyst Aaron Rakers kept his overweight rating on the shares while raising his price target from $300 to $310. Cowen analyst Krish Sankar maintained a buy rating on the shares while raising his target from $325 to $335. Baird's William Power has a positive rating on Apple's shares with a freshly chiseled target of $310, up from $300. Same again for Maxim analyst Tom Forte, positive rating with a target move from $300 to $310. Even analysts who aren't currently into Apple had to tap their toes to the tune a tiny bit. Rosenblatt analyst Barton Crockett has a hold on Apple's shares, though he's raised his price target on the shares from $268 to $276. And finally, Barclays analyst Tim Long hangs on to his practically incomprehensible sell rating on Apple shares. Still up his target, though, moving that from $248 to $253. So as not to paint too rosy a picture, there were analysts who didn't make moves, who are not high on Apple, but still have points of concern worth considering. Raymond James analyst Melissa Fairbanks worried about the low end of the iPhone line. Based on a recent trip to Asia, her note says several suppliers expect lower-end iPhone portfolio to bear the brunt of the higher memory costs, while premium tier pricing remains unchanged. That'll potentially temper end market demand for the iPhone 18 cycle. Ms. Fairbanks has a market perform rating on Apple's shares with no stated price target. Meanwhile, KeyBank Semiconductors analyst John Vinn noted what Apple CEO Tim Cook said about the rise in memory prices impacting Apple after the June quarter. Mr. Vinn has a sector weight rating on Apple's shares with no price target. I told you last week that there was something on Thursday's Apple earnings call about the company no longer providing net cash neutral as a formal target. Apple will instead evaluate cash and debt independently. I said I had thrown out the bat signal on that. Kind of bummed that Batman didn't show up, but financial analyst and longtime friend Rob Black, online at robblack.com, did show up with a bit of explanation. What I offer you now is a layman's interpretation of what Rob sent to me with sources noted. Basically, Apple had too much money in the late 2010s. For you and me, that might be a good problem to have, but for a publicly traded company, shareholders can see a cash hoard either as a pile of missed opportunity or as a pile of money that could be theirs. Apple could buy other companies, invest more money in new technology, or, reward investors for being investors. In 2018, when Apple had over $160 billion in net cash, Barron's Adam Levine says the Cupertino company announced a plan to get net cash close to zero through an aggressive return of cash through share buybacks and dividends. Put another way, Apple was making so much money so quickly, it chose to aggressively return it to shareholders. With a stated goal of being net cash neutral, investors could see that a lot of the money Apple was making was going straight back to the investor, and there was much rejoicing. Move ahead about 8 years, Apple has whittled net cash from a little over $160 billion to a little over $60 billion. Also, the world has changed. While some think AI represents phenomenal opportunity, it comes at a phenomenal price. I'm sorry, everybody's assuming that Apple's move is tied to AI. Let's forget about that for the time being. Moving away from net cash neutral means Apple can make R&D and acquisition moves without worrying as much about dollar in, dollar out accounting. Rather than an equation that says, we made this dollar, here's how we're returning it to investors, Apple now says, here's a column showing money we made, and here's a column showing money we owe. Additionally, Apple CFO Kevin Perek made clear that Apple intends to keep returning money to shareholders in the form of buybacks and dividends. Perhaps as a sweetener, he also announced that the company was raising its dividend by 4%, which isn't a lot when you're talking about a single share that somebody might have gotten for fun, but starts to be real money when you're talking about the amount owned by Berkshire Hathaway and other such institutions. Rob indicated that the new old accounting would allow Apple to take on debt for major acquisitions. Writing in his Power On newsletter on Sunday, Bloomberg's Mark Gurman sees the move as a way to give incoming CEO John Turnus more flexibility. Flexibility to buy new companies maybe, or go on a hiring spree. The point is, Apple now gets to move with less constraint. More news in a moment, but first a word from today's sponsor, OneSkin, a new standard for your skin. And for mine. I told you a couple of weeks ago of a problem I've had for years. My face gets dry and flaky. And boy, is that under control now. I've been using OneSkin's OS1 Face for seriously less than a month. It's an essential moisturizer and part of their bestseller pack. Not only am I seeing fewer issues with dry, flaky skin, I can feel a difference. Like when I touch my face, it's softer. OneSkin is built around their patented OS1 peptide, which targets cells that drive wrinkles, fine lines, and loss of elasticity. And it is working for me. If you have an issue with your skin, face, scalp, body, I encourage you to go to oneskin.co/macOSken to check them out. With over a decade of research behind it, OneSkin's OS1 peptide is proven to target the visible signs of aging, helping you unlock your healthiest skin now and as you age. For a limited time, try OneSkin with 15% off using code MacOSken at oneskin.co/MacOSken. That's 15% off oneskin.co with code MacOSken. When they ask you where you heard about them, please tell them MacOSken. Try OneSkin now with 15% off using code MacOSken at oneskin.co/MacOSken. Remember a little over a week ago when we heard that all 256GB Mac Mini models were currently unavailable? Looks like that's moved from being a bug to being a feature. A piece from Engadget says Apple has stopped selling its cheapest $599 model of the Mac Mini based on changes on the company's store page. Only configurations that come with at least 512GB of storage and up are available, which means the Mac Mini now effectively starts at $799. The lowest tier is likely a victim of Ragnarok. Engadget figures memory constraints, storage scarcity, and demand from AI tinkerers may have done in the 256GB machines. That's based partly on something Tim Cook said on last week's earnings call. Quoting the CEO, "We think looking forward that the Mac Mini and Mac Studio may take several months to reach supply-demand balance. Both of these are amazing platforms for AI and agentic tools, and the customer recognition of that is happening faster than we had predicted, and so we saw higher than expected demand." Hey, let's play another round of Do You Remember? Remember on last week's call when BofA analyst Wamsi Mohan noted that Apple CEO Tim Cook noted higher impact from memory as you look beyond the June quarter? And then asked basically whether the company would be more likely to raise prices or take a hit to margins to grab market share. I know, Mohan was talking about iPhone, and you can't say that Apple is sacrificing market share. not with the $599 MacBook Neo out there. Still, one is reminiscent of the other. Speaking of the other, waits for Apple's entry-level laptop keep slip-sliding away. I did that thing I do, when I remember to do it, over the weekend. Checked availability of MacBook Neo through Apple. There is still a hefty wait. As of the afternoon of Sunday, the 3rd of May, each capacity and every color of Apple's low-cost laptop showed deliveries between the 19th of May and the 27th. As for swinging by and picking one up, more like swing and a miss. If I'd ordered one yesterday, they were only promising in-store pickup on the 27th of May. Might have turned into another case of Apple under-promising and over-delivering, but the stated wait is close to a month. macOS Ken, brought to you by me and sponsored by NordLayer, toggle-ready network security built for your business. Get savings on top of savings with offer code macOSKen-10-NordLayer at nordlayer.com/macOSKen. This show is also sponsored by OneSkin, a new standard for your skin. Try it now with 15% off using code macOSKen at oneskin.co/macOSKen. Advertising handled by Backbeat Media, online at backbeatmedia.com. You can find me on Mastodon, macOS Ken at mastodon.social. You can also send me an email, info@macosken.com. Until next time, that is news from macOS Ken. I'm Ken Ray.
The Force will be with you, always.